So I'm going to go to Ali, your question here. So Ali, country of residence, Pakistan. The question is, do I have to pay taxes being a foreign owner on profit of U.S. company, foreign source income? To answer this question, I need a little bit of context, right? I need to know what kind of entity you own, and then on the general level, what kind of business are you doing, right? Once I'm able to know that, I can be able to tell you whether your income, your profit is taxable in the U.S. So number one question for you, what kind of entity do you own?
I own LLC.
A single member LLC.
In Wyoming, yes.
And then, okay, in Wyoming. What kind of activity do you do?
We provide digital marketing services and advertising, yes.
Okay, so all the digital marketing services are provided from your country in Pakistan, and you don't have any employees or anything?
Yes, but we have a physical bank accounts in the US only.
Okay.
And the registered agent service, which we take from the providers.
Okay, so digital marketing basically means that you're one of those people that buy paid ads and you do content
we do Google ads and Facebook ads, yes.
Okay, cool. All right, so the kind of business you're in is a service provision business. You're providing services. Under the U.S. federal tax code, the income received from services are sourced to where the services are performed. Okay, so if you live in Pakistan to do all this work, your computer stays in Pakistan. That is where you manage and operate all the business activities, and nothing of that sort happens here in the U.S. So your income as a foreign owner of a U.S. single member LLC who is providing services from abroad, it's not U.S. source income, it's foreign source income. And therefore, it is not taxable in the U.S. But that is only for federal level, because in most of my videos, I talk about the fact that the treatment on the federal level and the state level is like day and night, right? In some states, for example, California looks at where the benefit is being derived, not where the services are performed. So, for example, if you have a California, someone you've done work for in California and they've paid you, the benefit was actually received in California. And so it's California may look at the amount of income you're receiving and look at whether you cross the threshold or not, and then see if you have to file taxes, right? But on the federal level specifically, which is what most people worry about, the income is not taxable. And then also foreign persons are not taxed on foreign source income.
And if you're doing a big, let's say, so based on if you are based in Wyoming, so, but you mean that it depends upon the client's side, in which state he is.
That's correct. Like that? Yeah, so we have 50 states in the union, right? Each state has its own laws, and each state also sets its own threshold. Some states will say, if you make more than 100,000, you're considered to be doing business in our state and you need to file taxes. Others will push it to 500K. There's so many variables. So when it comes to the state level, my advice is that you sit one-on-one with a CPA, let them go through all the states and the income you've received, and let them make the determination whether you have to file taxes in that state or not.
Makes sense.
All right. And then also, the mere fact that you have a bank account in the US, you have a virtual address, and then you also have an LLC, doesn't mean that you have a physical presence in the US. There has to be more details to figure out whether you have a physical presence. So I've got a question from Ali. Being a foreign owner of Pakistan, what forms need to be filed? Okay, so Ali, I think we addressed your issue where you said you're in the digital marketing space. Based on your fact and circumstances, we know that you don't have to pay federal taxes, but then there's some other forms you need to file, which is the Pro Forma 1120 and the 5472. You have to file that form on or before April 15, 2023. There are 3 ways you can get a penalty for these forms. Number one is you don't file it on time and you're late, you can get a $25,000 penalty. Number 2 is you may file it on time. You may have filed it on time, but you filed it incorrectly, or you filed it wrong, or provide false information. You could get a $25,000 penalty. And then 3, that is if you've had an extension but you still didn't file the return when there's the due date for the extension is due. So all of this could give you a penalty. So it's important that you either read the instructions to know what you're supposed to do, or hire someone, hire a CPA who can do it for you. The next question is whether you need to file a 1040 NR. Now, a 1040 NR is required if you have, there are two things that triggers you to file a tax return as a non-resident. One is whether you have a U.S. trade or business, which is effectively connected income, right? And we've established that you don't have a U.S. trade or business. And so you don't have to file a 1040 NR.
Okay. But I have an ITIN made.
Say it again.
I have an ITIN.
Yeah, that's fine. You can have an ITIN and not decide to file a tax return. Just having an ITIN does not mean that you're obligated to file a tax return every year. Nobody's forcing that down your throat. So ITIN does not control whether you have to file a tax return or not. Your situation and what you're doing is what controls. So we've established that you're in the service business. All the services activities are done from Pakistan. That's where everything is done. Therefore, there's no U.S. source income here. There's foreign source income. However, like I said, if you want to know the other side, on the state level, we have 50 states in the union. Each of these states have different rules, and they are not the same as the federal level. So you also have to look at the state, which state you're getting the most sales, and then figure out what you need to do in those states.
Okay. And what are your services if we hire you for the foreign filing?
I have them on my website. The current prices are on my website, and you guys can take a look at them.
Okay, makes sense.
Let's go to the second, because when I was discussing, I said foreign person can be taxed on two types of income, which is effectively connected income. And then the second type of income is, we call them FDAP income. So they are generally investment of passive income, right? So things like interest, dividends, capital gains, royalties, and all of that stuff, right? Now, interest from bank and checking account and savings account are generally not taxable to a foreign person. The purpose behind this is to encourage capital to flow into the U.S. And so usually when you get, interest income from those sources, they are not taxable. And then capital gains is also not taxable to a foreign person. So let's say you live in Pakistan or India and buy an Apple stock, right? You buy it $100 today, you sell it tomorrow for $200. You have a $100 gain. Those are not taxable to you in the US. And it is only taxable when you're a foreign person and you've lived here for 183 days or more during the year you made the gain. But if you don't have anything doing here, and all that you do is sit in your country, you have a brokerage account and you trade in and you make capital gains, then there's no taxes to pay. Third one is dividend. Dividends are taxed at 30% rate, unless you are from a treaty country. So if you're from countries like Nigeria or Ghana, where I come from, you will pay 30%. Now, if you're from other countries like India, China, all these European countries that have treaty with the US, your rate may be lower. Sometimes some pay 15% or 10%. It depends on what the treaty says. So if you're from a treaty country, you always have to look at what the treaty says. For example, Pakistan, last time I looked at the Pakistani treaty for royalties, it was 0%, right? So those things are very important if you are from a treaty country to look at it and see how the tax code and the treaty helps you. If you're providing services and you live in a foreign country, then that country is a country that is required to tax you on your income. Now, when it comes to states, like I have already stated, the state laws are different. We have 50 states in the union, and I cannot be on this webinar talking about all the 50 states. Each state has its own rules on what is being taxed. And I gave an example like California. California does not look at where the services are performed. It looks at where the benefit is derived from. Let's say if I live in California, let's make this a simple thing, and I hire you to do digital marketing for me, and I pay you maybe $5,000 to do that, right? On the federal level, you live in your country, maybe Zambia or some other country that you come from. That is where you did the work. And so that is a country that should be taxing you, because that's where all the management activities took place. That's where all your operations took place. That is where your computer is located. That is where your desk is located. That's where you sit. That is also the country that provides you protection if someone invades your space. Now, on the state level, it's a different story, because on the state level, for California, for example, they look at where the benefit is derived from. So if you're providing, if I've hired you to provide digital marketing services and you finish the work, I, in California, got this benefit of what you did in California. So any payment that I make to you may be taxable in California. So you always have to look at what threshold, right? How much do I have to make in California before I start filing tax returns or franchise tax return with California? It's all an individual analysis that you need to make. However, let's just say that you go through the California, you go through the federal, and you still don't have any taxes to pay. That's fine, then that's a good story for you, but you still have to file an information return, which is the Form 5472 and 1120. The 1120 is an information return. It's not a tax return. It's not a return that wants to know what your income and expenses are. It is a return that wants to know who the foreign shareholder is, how much they're putting into the company, how much they're taking out, do they have any related party transactions, like I have mentioned earlier. Everything else could check out for you, but don't forget about the pro forma 1120 and the 5472 if you have an LLC. If the LLC is owned by a single person, that's the form it files. If it's owned by multiple persons or multiple member LLC, then you file a Form 1065. 1065 is due on or before March 15, 2023, or it's due on or before March 15. The single member LLC form is due on or before April 15. So if you formed it last year, 2022, it will be due this year on or before April 15, 2023, if it's a single member LLC. If it's a multiple member LLC and you formed it last year, then this year, 2023, your due date is on or before March 15, 2023.